What's up, gang? What's up, everybody? Let's get it, let's get it, let's get it. All right. All right, all right, all right, all right, all right. Let's look at the daily. I've been on for a little bit. All right, so I'm gonna get started. So let's see. What up, Drizza? My dog. See how the Nasdaq ended today? I actually had a sell in the Nasdaq that I closed break even. What was my entry? My entry was 201.61. 201.61. So I shorted right. I believe I shorted here. Right. I believe I shorted here. And I couldn't get out. And I took a pineapple and ended up getting out, I think right here. So I took, yeah, I took one $80 win and then one $50 loss. My sell was all the way down here. 61. Hell yeah, bro. Let's go back to gold. Let's go to gold. I'm having a great week, bro. I'm having a great week. That's a pretty good week on this challenge. What up, Jonathan? Everybody's rolling in. What's it called? So gold just started driving all day today. I have no bottom wick here on my daily candle. Let's get an analysis on. I don't need this anymore. I don't need this anymore. Hey bro, these are the top tabs that you need. Damn, I drew all these ranges when we were all the way down here. Look at where my runner's entry was. Oop. I had an entry on my runner right here. And since then, we've driven 400 pips. That's wild from where my runner was. So let's start marking up new levels. Alright, so how did this weekly start off? What's this weekly doing? Let's look at the monthly. Our monthly is still bullish. We have a nice bottom wick on the monthly. We created new monthly highs, I believe, this week. We created new monthly highs. So this is just clear higher highs, higher lows, straight up bullish structure. Gold is massively bullish, but we're at this level of resistance and we did not break all-time high. We just barely tapped all-time highs. This is all-time highs. I want it to be in the middle on the right. Oh, I see why. So this is all-time highs, and then we missed it. We did not make it, and then the current daily high is right here. Oh, this is the previous daily high, sorry. Previous daily high, previous daily low. So we kind of, well, we do have a bottom wick here. We do have a bottom wick here on the daily, on the previous daily. We rejected here, but we closed above this level. This is a massive bearish zone right here, from here to here. Massively bearish. Price came up, rejected off this level, price rejected it, price rejected, and now price broke out, and we're starting to reject once again. But what do you notice here? When price rejected this level, we had one massive wick up into this range, and then we died. So that's 120 pips. That's wild. So what I would like to see tonight, bro, we didn't break these highs, so a sell down, it could still be possible. We were pretty fucking close. That's 60 pips off. That's not bad, to be honest. I would like to see we need a top wick on the daily before we come down. So 100% before I take sells anywhere in this level. On the Oanda, we did. What's the daily? Now see, on Oanda here, we closed above this most recent, but not this one. But our 4-hour did. And then we closed right back below, doji candle. So we literally have the celery play right here. That's the celery, what you just saw right there. So where's that? Where's the celery play? Or this is what we just saw right there. This move right now is what, sorry, where? I'm tripping. No, right here, the celery play. Bearish down into range, doji candle respecting the range, the next candle comes down after forming a top wick and breaking the lows. That's the celery play of the DVS playbook, which is exactly what we're getting here. That's not what I wanted. Which is exactly what we're getting here on the 4-hour. Price came back down, closing to range, doji candle, this one came up, made a top wick and flipped bearish. So ideally you want it to fill this range, but since this 4-hour closed like this with barely any volume, it didn't fill the range. I'm expecting a pullback before a continuation down. I would like this daily to have a top wick, a nice top wick, somewhere retesting these areas before coming back down. Because I mean, we do have heavy news tomorrow, and if London pushes us down to like these levels, breaking the daily low, we can get some nice longs into tomorrow. We can get some nice swings into tomorrow if tonight and London is just retracing the entire move that we made today for the drive tomorrow, because we're at all-time highs. So what are the chances that price stays at all-time highs, and then we have these massively bullish, these massive news days, and price doesn't continue flying? I mean, everybody's bullish on gold. So when you have a day with like 20 different news folders, you're gonna expect some chaos to happen. which honestly, I might load up a gambling account and any pullback that we get, I'll just start scaling in 0.5 lots, 0.5 lots, 0.5 lots until I scale to the max leverage on the account, because I am massively bullish. And if you do get a massively bullish push tomorrow, that will literally pass a funded account in a day or flip $100. Yo, if you guys can go like and comment on my latest reel. My last reel that I just posted is at 117,000 views. I made a meme. What does that say? 117? Can you see that? That's pretty fucking good, bro. I think it was a pretty funny meme. I'm gonna show it to you guys real quick. Oop. What up, dude? Fuck it. This is a Forex stream. So, even though our daily doesn't have much of a top wick, we still are bearish coming down. We're scooping on the hourly SMA, and we're in this massively bearish zone. So I am not opposed to taking any sells, even without a daily top wick. But with that being said, we could just retrace this entire move today and make the top wick later. So that's also a possibility. So after seeing what price is doing now, I'm not really interested in much of a pullback before taking sells down, because let's see what's going on here. Price came down from a resistance here, broke below, from the resistance, came down, and now we're respecting this resistance that it just formed, and we're creating lower lows, lower highs on our way down. And not just lower lows, lower highs. It's on the 30-minute time frame. It's on the 15. It's on the higher time frame. And we're respecting this level. So I would have said I wanted a pullback maybe on this first drive. And we did get a pullback. And now price is kind of respecting this area, but we still are breaking below. So we might see some early moves tonight for me, possibly. I'm going to be looking... I don't start trading till 7:30 for the next hour, so I'm going to be looking to see how this next hourly close. If this next hourly and 30-minute can close below this range here, that would be, and give us like a wick to fill, that would be nice. If we can get the same exact move that we got here underneath, see how we came down, and then if we can get this exact same setup, is exactly what I would be looking for a continuation. So if when I come back from the gym, if the hourly closed below, the next 30-minute came up with a top wick here, and we're starting to come down to retest these areas, somewhere in this area here is where I would be looking for sells for a continuation down. So this is where I would be looking for sells on the break of this low, or it depends. Let's say you get, the price comes down, right? And you get a 5-minute candle that closes like this. Whatever. Damn, that's ass. And you get a 5-minute candle that closes like this. And then the next candle closes like this. And then this candle with no top wick. And then this candle comes up with no bottom wick, grabs a top wick here, On the flip bearish, this is where I would have my entry for a continuation to the downside. That's where I would have my entry. Once this candle comes up with no top wick first, creating a top wick for this 5-minute candle that had no top wick, grabs orders from the most recent support that is now turning into a resistance, and then it comes down, and that would be my entry. But you would have to have a higher time frame closure below, and you would have to have that happen like on the 5-minute, the 15-minute maybe. That is one of my favorite entries to take for a continuation. So if we get this doji closure and this candle comes up, you can definitely take a nice continuation to the downside if you get something like this happen. Where is the eraser? Wow, if we get this, that's basically what I would be looking for. A closure below this area, price comes up to retest, and then we can get some sells to the downside. I had a pretty decent day today. On gold, I caught 40 pips. So I took a sell here. So once we had this closure right here, where was it? Right here. So once this candle closed back into range, that this candle flipped bearish, this is where I had one sell. My stop loss was on the highs up here. Then price came up, grabbed some orders here, and because this is how I take my pineapples. I take my pineapples based off of structure, and I set my stop loss based off where price would likely go next. So since I had a sell stop here, and I got activated here on this candle, I said to myself, okay, bet. If price then breaks down below this area, I am correct, and we're going to continue coming down. But if price breaks these lows and activates my sell stop and then breaks the highs, what are we seeing now? We have a high, we have a low, we have a high, we have a low, we have a high, we have a low that it's retesting, and then if it breaks the high again, that's lower lows, lower or higher lows, higher highs. Market structure is continuing bullish. But since market structure shifted and is coming back into range here on the smaller time frame, that's when I took a sell. But when price started going up against me here, that we wicked up into this area, I was like, all right, we were 50% away from my stop loss. So halfway to my stop loss, I'm only risking 0.5%. I'm not risking a whole lot. I took another trade, so this is where I took a second entry. So in total here, I am risking about 1%. I started off risking 0.5%, and now total risk on the trade, I am 1%. Once this candle wicked to the downside, that I was break even on this position, that this closed with barely any bottom wick. This next candle opened with barely a top wick, with no top wick. I closed all my positions. Why? Because that's not a trade that I want to be in. If this candle had a top wick, then I would have wanted to stay in the trade for the continuation to the downside. But since we had no top wick, price, what did it do? It pulled back, created a top wick for this 15, and then kept coming down, which if I would have kept holding, I would have had one position in profit and then one position that would have been hovering break even and then going into a little bit of negative. But since I stacked on the position, I closed at full right here. So I took 20 pips on this one. It was 20 pips basically on this entry. It was, so what is 116 minus 113 on a 0.5 loss? So yeah, that is 20 pips. So since this daily here has no bottom wick on my end, since we're coming down already on gold, if we start getting some closures below this area here, Honestly, I think that that would be very, very good. I think that would be very, very good. You seen that video, bro? That's what happens when you full port your account. Can't be full porting accounts like that, bro. Check this out. That's one of my best performing shorts. One of my best performing shorts. That's pretty wild. This video, 117,000 views. Holy shit, it just got another 17,000 views in an hour. It's giving me 50 subs, 60 subs. This is the live. Last 60 minutes, 3,000 views. That's wild. That is wild. I've actually been growing pretty quickly. I'm almost at this. Damn, bro, I need 3,000 watch hours and I'm at 56, homie. 50 fucking 6. That's insane. Or 3 million shorts views. YouTube is like, nah, you're not gonna get no money. You ain't getting no money. Look at these cells, bro. They're looking clean. Clean. What would ICT call it? An FVG? FVG, CG? I don't know. That's a twin turbo Lamborghini. That I don't know if it's stock, but I'm pretty sure it's likely aftermarket. But if that is stock, I'm pretty sure the car was giving a warning and that car is shot. There's nothing you can do there. It would, because an oil change on a Lamborghini and on a car like that costs so much money that now to do a repair on it would cost even more than the car itself cost. So the best thing to do is just to pay the 5-10K deductible for the insurance. The insurance pays off the loan because I'm pretty sure the car is financed, and then he goes off without having to continue paying the car. But it's possible that that's what happened. But yeah, a lot of people are saying insurance scam and all this other stuff, and yeah, it makes sense that it could be an insurance scam, but at the same time, he just made $1 million off $100, and 300 people are signing up to his boot camp, and that shit is getting so much propaganda that homie probably made $1 million in ad revenue this month alone. So to pay off a $170,000 car, $200,000 car is probably nothing. Yeah, so this is what I would be expecting for tonight. This is one of my favorite moves. I mean, if we do start ranging and then price does start coming up, you can take a buy. So that's how I scalped today. So today I took a short off of this area here, and then I took a buy off of this area here. Why did I take a buy off of this area here? Because price started ranging. So I knew that we were no longer in a trending market, that the market was now ranging and the market was trying to pick aside. So what happened? Price was bullish all day. We broke out. We tried to make new highs and failed. We tried to make we tried to break back into range and we failed. And then what did price start doing here? Sorry, where was my short? I'm on the 5-minute chart. I'm looking at this wrong. Right here. I took a short somewhere here and then somewhere here again. But why did I take buys when we came up off of this level here? Because price is now consolidating in this area, bro. It's just bouncing back and forth. It tried to make new highs and it failed. It came down. It came up to make new highs and it failed. And it's starting to retest this area again. So we tapped this area once, 2, 3, 4. And now this is the 5th time. So once this candle closed, respecting this area, that was my first indication. All right, this area is important. If this entire bearish move down was not strong enough to break through this area, something's going on at this area. So I then went down to the 1 minute after that closure. Price came down, we went right back into range, and what did we have here? We had the celery play. So after I saw this happen where the celery play, I took a buy right, I believe here on the buy stop here, and I closed instantly at like 15 pips. So I can show you my entry here. Where's my entry? So this buy here was at 26.76, 26.70. Is price? Oh, my price is different here. 26.76. Let's go to the 5 minute. So 76 was right here. So yeah, let's go down to the 1 minute so you guys can see the exact entry. So that same celery play that we saw there, 76 was my entry right here. So I actually entered on the bullish flip of this candle, on the bullish break. So I entered here, which the market execution is probably, I hate how this does this shit, bro. And it changes. So this was what was my entry. I entered here, I sat in drawdown for a little bit, and then price drove my way. I closed at 10 pips. So I closed right here at this first bullish candle that we drove up after my entry. So you can start to see, when you see price starting to respect an area and you see it respect it like to the T, like that 5 minute candle, you can then start looking for your entry types, because you know this area has a high probability of being important. But one thing to keep in mind, since we respected this area, because we respected this area, price is now what I would consider consolidating, because we've now created a high, created a low, we're bouncing back and forth from this area here. So what I would consider consolidating, and then I wouldn't be looking for breakouts in this case. So until I see a clear indication of a breakout, I wouldn't be looking for any kind of breakouts. You see, we tried to break out here and we failed, and price came right back into range, right back above this area. That's super important. So if you start seeing price floating back above this area, this is why I wanted to see that break below, like I said here. That's why I want to see this break below here, because this price is strong here, really strong. So since price is consolidating, that's going to change the kind of entries that I'm looking for. I'm not looking for breakout entries anymore. I'm going to start looking for more of a reversal type entry, because I know that price is most likely going to be consolidating. Because if you do try to take a breakout, you're going to take a breakout here, and then you're going to get faked out and be hovering break even again. So you know, you were looking for a 20-30 pip move and price drove a little bit and then it faked you out. So even though this is a massive range, it's not always, just pretend it's a small range. But since price is bouncing back and forth from here, and we respected this area, I'm now going to look for a reversal type trade, and I'm not going to be looking for much runners either when we're taking the reversal within a consolidation. So I wouldn't want to be taking I've watched so many trading videos, but I still don't understand what to do. Can you please make a video on how to trade directly in simple English? So if you want to take a trade directly in simple English, this is what you do. You go to your account. Let me log into my account. And then you go and you identify what price is doing. You say, okay, cool. price is bullish. I want to buy, and you press the buy button. And then you say, okay, cool, I press the buy button. Where's my stop loss gonna be? Right here. Cool. Where's my TP gonna be? Right here. And that's how you simply trade. But now, if you're asking what kind of strategy should you use, how do you enter and exit trades, and that's why you got to come to the live streams, because I'm explaining to you what are the possibilities of the day, and then what are the key levels for the day, and then you yourself have to then identify what's going on at these key levels and use whatever you've learned to then take an entry. So I trade based off of candles and this SMA here alone. So if you see me, you saw how I explained this entry here. Basically, price is driving heavy without a pullback. You need a pullback eventually. So when do you start looking for a pullback? You start to look for a pullback at levels where price has previously pulled back before. You have a level here, you have a level here, you have a level here, you have a level here. So what did I do? I marked that level as an important key level because I know that price has previously rejected that area in the past. So as price is driving down with no pullback, where is the most logical area for price to pull back at? I would have said right here at this area. So what did price do? The first 5-minute candle that came down into this area tapped the level and then rejected. Then you would have looked at the next candle that closed and seen, okay, one candle rejected, what are we gonna do now? The next candle came up and closed bullish, confirming this as a support and a rejection. So now you have two confirmations that price is driving bullish off this level. So what is your next step? You gotta look for your entry type. So you now have a confirmation that price is rejecting the level that you thought was important. Price is now closing, forming support at that level. So how can you catch your entry? That's when you would then use your SMAs, your EMAs, whatever kind of entry type you use. I use candle structure. So this chart right here, I got it from controllerfx.com, from Donvo's website. So you can go to Donvo's website, Controller FX, and you can go to the resources and get the playbook here. But I look, so the entry that I took was the celery. So what do you see here on the celery play? You see price closed bullish above the range. The next candle closed bearish doji, respecting the range that we just created, confirming this as a now a resistance. And you see this next candle here, how it created a bottom wick and then flipped bullish. That's the kind of entry that I took here. So after you have your confirmation that price reacted off this key, after you have your key level, you have your confirmation that price reacted off this key level, you know that you're in need of a pullback after this massive push down. So you have these three different confirmations, and now you wait for your entry type. So my entry type happened right here. You see the bullish closure back into range, the doji bearish candle. The next candle came down, formed a bottom wick, and then flipped bullish. That was my entry type. I took my market executed because I was a bit late, but I entered right here, and ideally I should have entered here, but I got in right here, and then that's basically it. My stop loss is here at the break of the lows, because I know that if price rejects and starts to break these lows, that it's most likely going to continue down. You look for your most logical stop, because if you do re-break these lows after respecting it, that's like the 5th time that you've tested that area. So you're likely gonna break it after rejecting it, closing above, and doing all of this. So that's why my stop loss was right here. So, and that's all that you need to do, bro. You have your stop loss, you have your entry, you figured out the direction the market was going, you figured out what you were looking for, you figured out the area of interest, you saw price react off your area of interest, and now you're looking for your entry type. So that's the entry type right here, which is the celery play. So I took the entry, and now you manage risk until you hit your profit. So you identify your break-even level. So The closest break-even level I would say would probably be this area here, because we have major rejections to the downside here, major rejections to the downside here, major rejections to the downside here. And if price bounced off this level and then rejected here, that would be your lower high for a continuation to the downside. So that is the perfect spot to go break even. So before I even explain the rest of the trade, I showed you the break even. And now what do you see from my entry? Price was a little bit negative, tapped the break even point. I went break even, I closed my position, and what happened? Price never came back down to my entry. Beautiful trade that ran. How many pips did that run? 54 pips. So you have to identify what the market is doing. Are we ranging? Are we consolidating? So I have it written down here. Are we consolidating? Are we driving? Or are we pulling back? So right now I saw that price rejected all-time highs and came right back into range, indicating to me that we're likely consolidating. So what proved to me that we were going to consolidate in this range? When we bounced off this level, came down, and then bounced off this level. So now we're just doing a zigzag. Price is just bouncing back and forth, back and forth, back and forth. So now that I've confirmed we're doing that zigzag, and we've confirmed that we're bouncing off this key level right here based off the previous bounces in the past, that's when I look for my entry type to take to the upside. And now that's when everybody's entry type is a little bit different, because you could be a trend line trader. So you could have had a trend line right here, and you could have taken a break of the trend line. But what do you see? My celery play is right here. A trend line trader would have taken a break of the trend line right here, which would have been the same entry as my celery play, and I found that entry based off of a different analysis and different candle structure than a trend line. What would somebody else have done? Somebody else would have waited for a scoop of the SMA at this level. What would that have caused? That would have caused them to enter right here, which is at still the exact same price point that I entered off of my entry. So if you notice, all strategies lead to the same idea if you know what you're looking for. If you can identify the proper key level, if you can identify exactly what the market is doing, almost every entry type works in that area, because you've identified the right area and you've identified the right move. And with your entry type, it can give you the best possible entry. So you see the trend line gave you an entry here, the SMA scoop gave you an entry here, the celery play gave you an entry here. So all three of these gave you the closest possible entry to, and they're all basically on the same price point. You see what I'm saying? So at that point, it's up to you to manage risk from then on forward. So how do you manage risk? You choose a break-even point. So once I'm break-even, I go break-even, risks off the table, RR to infinity. Now that risk is off the table, you can decide to close partials at 10 pips, or you can look back at your history, which is important. You got to look back at your history and say, okay, 90% of my trades are driving 30-40 pips. So why am I closing at 10 pips? Let me hold my trades for longer. If my trades are driving 40 pips 90% of the time, there's no reason for me to close at 10. Instead of me choosing a break-even point, I'm not gonna go break-even, and I'm just gonna let it hit my TP, because I know that the way that I analyze the markets, it usually drives 30 to 40 pips. So personally, when I started trading, I decided that I would never use my own money. That I prefer keeping my own cash in my bank account, and I like to see my bank account stack up, and I want to leverage prop firms. So I'm trading a prop firm account, and that's what I would suggest for beginners, because I mean, it depends, bro. Some people say to trade $100 cash account and this and that, but for me, spending all day on the charts and trading a 0.01 and then seeing $3 gain, to me that's devaluing my skills and wasting my time. Whereas if I'm trading demo, an eval account, and I make $1,000 in a day, it's not real money, but it proves to me the possibility, or it shows to me the possibilities of the future, what I can really do if I really lock it in. You know what I mean? Where it really shows you how far a small 10-20 pip move can go when you have a large account. Because when you're like, oh, I'm taking you, it's a hard psychological hit when you trade $100 and you only make $20 in a day. You're like, wow, I need to catch bigger moves. I need to catch bigger moves. When in reality, you don't need to catch bigger moves. You just need a larger account. And for many people, that's difficult to do. So that's why I want to scale funded accounts and milk the fundeds for as long as possible, and then afterwards fund a live account. But I started my live account. I started my live account with $100. Then my friends and I pooled our money together and we started a live account together where me and my other friend traded the account for all of us. I think it was like 5 of us pooling our money together. So we flipped like $1,000 or under $1,000 to like $5,000. So we split that between all of us, and then each of us left with $1,000. We paid our boy the taxes that he was gonna owe, and we each got our little bit of bread. And we flipped an account. So that was my first experience flipping a small amount of money to several $1,000s. And after I realized that, I was like, all right, if I can do this on a small account, all I need is more capital. So I decided to save my money and just start doing fundeds. And I've passed a lot of funded accounts. But with Apex, the rules are just way too difficult, bro. I can't stand these rules, and it ruins my psychology. So I've decided to stop trading Apex and go to a Forex firm. So where would it be? Oh, it's under signatures. So these are all the funded accounts that I've passed on Apex. 2 250s, 1 150, and 2 50Ks. And having all those accounts really showed me how all I have to do is just lock it in and I can scale this shit to the fucking moon. So yeah, bro, it's what I explain now is fairly simple, and that's how you want to see. Yeah, bro, almost $1 million in funding, bro. There's people on the internet that have $100,000 funded account, and now they're selling courses on how to pass a $100,000 funded account. And over here with almost $1 million in funding, and I'm not selling fucking shit because I'm not a fucking scammer. You have these guys that passed one funded account after like 1 million times, and now they're selling courses. Like, bro, get on live, trade live, show us proof of concept, show us proof of what you're doing. Like, it's wild. Like, there was this one dude, he's like, oh, I spent $100,000 trying to get funded, and now I got $1 million in funding. I'm like, bro, where's the payout, bro? You got $1 million in funding, you spent $100,000, but you have no. You're showing me these certificates, but where are the payouts of you getting paid out on these funded? You can't be selling people on how to get funded when you've never gotten funded, or you've never gotten paid out from your funded company, bro. Come on. Yeah, bro, it's wild. So I'm just showing proof that I'm not bullshitting and I'm really doing this for real, and really coming in here every day and grinding hard for this shit and not faking it like 99% of these gurus. So everything that I'm doing is gonna be for free until further notice. Free. I'm about to hit my wee. And don't get me wrong, I get that sometimes you have to exaggerate a little bit for marketing purposes. And if you're trying to market your business, you have to make yourself sound not better than you are, but you have to make yourself sound good. You know what I mean? So, you know, you could see somebody in fancy cars, nice clothes, but none of that means nothing. Just because I could wear a nice watch or have on a necklace or something like that doesn't mean I got that shit from trading. I have a job, bro. I have a check here that I haven't deposited that's just been sitting there since 9/16. So damn, it's been exactly a month that this check's just been sitting there that I haven't deposited. That's why you need job funding. You need a job. So why? So you can have a job that gets you a house, you can get a nice setup, you can have nice things, so that way you just hang out and you don't need trading for money. Now trading is like a side gig, a side income, and that's how you're going to see most of your progress when you're not trading for money, when you're just trading for fun. Like when Don became a full-time trader, he had made his yearly salary trading Forex, so he said, okay, bet, I have my yearly salary in Forex, so now I don't have to work for a year. Yeah, Richie, I gotta deposit it. This old guy's about to look at his bank account and be like, what the hell? He took a month to deposit this? Yeah, bro, sorry, I forgot. So, like, I'm not rich. I would consider myself broke. But other people would say, oh, bro, you have money. But I would consider myself broke. But it's all about perspective. Like, if you're like, oh, how much do I start with trading? Well, I have a friend of mine who's lost over 10 grand trading this year. 10 grand is a lot of money. Some people can afford to lose 10 grand and they're still living every day. Beautiful life, not worried about shit. You have somebody else loses 10 grand and that's their entire life savings. So it's all about perspective, bro. I would throw $100 into an account, trade a 0.03, so that way you can take partials out. 0.03 with like a 40 pip stop, you're looking at $12 loss. So if you have a 50 pip stop, you're looking at a $15 loss. With a $100 account, that's about 10% of the account, which is not bad. You don't want to risk 1% of the account. That's $1. That's fucking horrible. It's annoying. That means that you would be literally making 50 cents per trade. So I would start off with $100 and see what you can do with the $100. Look at this. This is a paper trading account that I started. It's at $10 million, right? What do you think I started it with? Just paper trading. I was like, all right, I'm gonna flip $1,000 and see what I can do. Account history. I started this account with $1,000. I pressed a short on Bitcoin and Bitcoin just died. And then a couple months later, I come back and I look, what does it say? I opened up an average thing of Bitcoin. It doesn't say the date. Oh, I entered on 9/16 and I closed it on, oh no, I don't even know. It doesn't even say. But one trade made me 30 grand. Then I kept trading. I lost 6 grand. Then I made 1,000, right? Then I made 4 grand. And this is all like months later. Then I made 1,000 again. Then I got some break evens. I lost right here, 9,000. So from 1,000 to 45K. But this is where the fucking crazy shit starts to happen. Let's make this easier. This is where the crazy shit starts to happen. 19,000, 86,000, 350,000. I lost 460,000. So basically these two trades, I lost them. This was a break-even trade, I think, or something like that. I don't even know. Then I made 1.3 million full porting the account. I think my balance was 50K. I full ported the full 50K. Then I lost 200K. Then I made 100K. Then I made 300K, so I made it back. Then I took some break evens. Then I made 600,000. But look at this. I lost. Then I made 7 fucking million. I risked the full 2 million in one trade. 7 million. I lost some trades here. But yeah, bro. This is just a fucking around account. And it went from 1,000. You can see right here, starting balance $1,000, and you can't edit none of this shit. I mean, what does that say? Let's see. Can I edit something? No, you can't edit nothing. Can you edit something? Oh, I can only include commission or reset the account. But let's get all the way down there. Let's risk 200 grand on this trade. There we go. And we're gonna pineapple out of here. Well, I'm gonna call it right there, gang. Some pretty good discussion, bro. I had some real good things to talk about today. That was a really good question, explaining how you kind of enter a trade, because it got my mind thinking again of exactly how I do it. But yeah, bro, it's all about identifying key levels and using other little things that you enjoy using, or that you use to whatever. You could use a trend line or whatever. You could use your RSI divergence. You can use your SMA crossings. You can use it bouncing off the 200 SMA. You could use whatever you want as an entry type, but what has to be the same across the board is identifying what you think the market is going to do and identifying key levels, because that pattern right there, it doesn't work everywhere. There's literally spots where it happens and it doesn't work. Right here, price closed bearish back into range. We had the doji candle. This price came up, formed the top wick first, and then flipped bearish. If you would have had your sell stop here for a continuation to the downside, price would have came up and stopped you out. Why? Because you have to understand what the market is doing. So this was first thing in the morning, 8 in the morning. So that happened around 8:30. So that's where we had news at 8 o'clock. So if you would have waited and done that pre-news, bro, news was good. News meant gold was gonna fly up. So you have to understand market context. You have to understand the news. So you have to understand that you're on a bullish trend, that price isn't consolidating anymore. Price broke out, came down, and broke the low again, and is now coming up to retest the highs. So price is no longer consolidating. When a price, to me, was consolidating was after the second bounce back into range, the third bounce back into range. So now we have all these bounces. We attempted to break out, it didn't work. We broke the lows and we attempted to break out, it worked. We almost broke out all-time highs, but we didn't, and then we died right to this support and respected it. So that's what told me that we were gonna start consolidating. You look at the hourly, and it's just straight chop here. Chop, 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 chop. But I think this was a really good fucking session. I'm gonna call it here, gang. I'm gonna leave this running for a little bit while I take some pre-workout, and I'm gonna head to the gym. But remember, this is what I'm still looking for. I would love for gold to just continue down, but this is the same level that we took buys off of earlier, right? Because the way that we respected. So you have to be very careful with this level. See, market open, respected this level, and now we're coming back to it. So this might be the breakout, but if it is, to confirm, this is what I would look for market structure wise. Unless you're willing to take the risk and have some large stops, because once we do break above this area again, we're likely going to come up and grab liquidity either here or back at all-time highs before any kind of sells happen. So if you enter here, you have like 70 pips before your next possible pullback and 100 pips before your next possible pullback after that. So I would really wait for confirmation so that you can then use this area up here as your stop loss and not have to be too scared. Because if you do break below, retest, and start breaking down again, you have clean range here all the way through. And you have clean range here as well with a minor little area here. But it's literally pure clean range all the way through. So in order for me to be happy with my stop loss there, I would have to maybe like enter here. And that would be my stops and my trade. Something like that. That's what I would prefer. I mean, technically I would prefer an entry higher up here, but this would have had to happen up here. So we would have had to have this up here, and then I would have taken that entry up top with my stops up here. That would have been beautiful. The perfect short would have been here. That would have been the perfect short. But for a continuation, because this does not look bad, we broke the high here. We tried to come up to retest the all-time highs and failed. If we do break these lows again, that means that we're likely going to come down steeper for a steeper wick for more liquidity before driving up. Which is what I'm thinking is going to happen anyways. I'm thinking that between London and Asian, or between Asian and London, that we start retracing everything that we did today to load up for news tomorrow before the push back up. I don't believe we would be very bearish. So if anything, we'll be bearish today and then back bullish tomorrow for news. Maybe we'll come down to here this time, because it looks like we tested all-time highs from here, from this level, and failed to do something. So maybe this will be the lower low, or maybe we're going to retest it one more time. I would be very cautious with this area here. This area is very important. But this is what I'm looking for tonight. I would like a tap of this area, and I know that we're bearish, so that's basically what I'm looking for a continuation. Something like this. Well, alright gang, I'm gonna call it here. Have a wonderful day. See you guys for Asian session. Hit up Market Mechanic. Remember, don't get scammed by these fake ass traders that don't do this shit every day. Show up every time that I stream. I'm going to be streaming at least like 3 times a week. Sometimes I get off work a little bit late. My cousin and I run a small family business, so we out here trying to get it any way we can. Have a good day, gang.